Welcome back, Alpha Hunters. The markets are closed for the week of September the 22nd. So let's check out what went on this week. Hopefully you did have a good week. The market had a little bit of a gap down on Monday. Not a big deal. Really, Monday, Tuesday were kind of quiet. Monday was pretty quiet. We had a little bit of an uptick in the first half of the day, and then we kind of sold back down. It's kind of like a nice little upper wick there on the daily action. Little bit of a gap down here on Tuesday, rolled down, and then we got bought up. So we had a lower wick there on Tuesday, and basically the market was just waiting for FOMC on Wednesday. We get to Wednesday, gap up, and that was basically about the high point of the day. It was right there in the early morning. Kind of sold down a little bit there. Went sideways until we got to the FOMC interest rate decision. Really about an hour before we saw some selling kind of coming in. And then, yeah, we got a drop. We got a quick bounce. And then, that was kind of when Jerome Powell was talking right there in the afternoon. Then it just kind of rolled over as he mentioned basically they think that they could do another rate hike before the end of this year. So that was kind of the interest rate decision was a hold. And they think that they might do one more rate hike before the end of the year from the Fed. Nice gap down here on Thursday as we were seeing yields and dollar push higher overnight, and very slow kind of chop down kind of day, especially in the last couple hours. We saw kind of just break through this 433 level, and yep, just kind of ended down on the daily lows. Friday, nice little gap up, traded higher in the beginning part of the day, and then in the middle part of the day we kind of just rolled over, got down. Last hour we tried to rally, and then we just broke back down. Actually got below 430 by a penny. On the live stream on Friday, I was kind of mentioning, I wonder if we get below 430 and close below 430 before the close on Friday. Well, we got down there in the last 15 minutes. We got down to 429.99, but did not close down below 430. So it's kind of an interesting week, and we got some things to kind of look at. So let's get looking at them. All right, sector rotation for the week. Well, discretionaries had just a bad week overall. Tesla was getting sold off pretty good. Amazon wound up getting sold off pretty good, especially on Thursday, Friday. There, Amazon was getting hit pretty good. Real estate also lagged behind pretty good. Materials, energies also underperformers for the week. In line with the market was tech. So that was kind of interesting. All right, tech in line with the market. You usually don't see that. Usually it's clearly in the outperforming or underperforming area. And then we also had financials were outperforming, industrials were outperforming, communications outperforming, staples, healthcare, utilities, all they're outperforming. Utilities didn't really see a whole lot of the selling action this week. Really, it's not like they were just screaming bullish. They were just just kind of nobody was selling utilities. Kind of like people were just kind of holding constant, holding on to those defensive sectors. You can see healthcare also up there, and staples, the top three performing sectors for the week, utilities, healthcare, and staples. And that's typically what you see when you go into downward moving markets, bearish markets. All right, take a look here at calls and puts, week over week change. And we did have quite a bit of calls actually get bought for this next Friday. Now, it might look like a zero, but it's not a zero. It's like only 300 or 600, I don't know, something like that for puts that got bought for this next Friday. So not a whole lot of change week over week there on the puts action, but yeah, a lot of calls getting bought for this next Friday. And then nice little uptick there on puts for October 6th. Quite a bit of calls there on October 20th, and then quite a bit of puts out there for November 17th. That's about how the week over week change for options went. Just kind of a scattering mixture of calls and puts getting bought. You can see quite a bit more calls getting bought compared to some of the previous weeks where there wasn't a lot of calls being bought. And I'm kind of curious when they were buying them. Were they buying them on Friday, that kind of thing. But just kind of curious. Federal Reserve balance sheet data dropped 3% this week, so by far one of the larger drops that we've seen in quite a while. It's the past several months at least. So yeah, kind of interesting there that they dropped 3% this week. Okay, Federal Reserve balance sheet data. The VIX. Well, since last week when we did break these lows that we put in back in June and July, we have now reverse course, and we are now closing over 17, which is a big deal. It's been a big deal basically for this bear market. And yeah, so it's kind of interesting. We had a nice little higher open on Monday. And then, yeah, we got Wednesday and Thursday, basically the Fed day, and then the fallout from the Fed day. We saw quite a bit of the uptick there on VIX. The DXY, the US dollar index, nice early week pullback. Monday pulled back, Tuesday a little bit of a lower wick there. Wednesday we had a nice breakdown going into just before the Fed. I mean, we were at the lower end of the day there. We had, for the previous hour before the Fed announced their interest rate decision, we actually started, moving bullishly on the dollar, and it wasn't strong, but it just started moving bullishly, and then it just popped when we got the interest rate decision, and for the rest of the day, it just kind of pushed higher up until we got to the close. But yeah, dollar looks pretty good. It's getting to a pretty key resistance level that we hit back in March, and we'll see. I mean, it's been on a pretty good trend here. I would imagine it's probably getting to the end of this trend. But the question is it going to push over this kind of top area that we had back in March and then retest and go higher? Or is it going to maybe consolidate here before it pushes out? And that's the good question. Right here, though, not exactly the best spot to be bullish on the dollar. One thing that is looking pretty good is precious metals. Gold, silver, that kind of stuff. So we'll take a look here at the GLD, and for how strong the dollar has been over the past couple months. Gold not looking as bad, and really it kind of started with this pop that we got from mid to late August. That has looked really good. But even here in September, dollars continue to push higher, and gold's not exactly just falling off here. So I think starting to pick up some medium to long-term, silver, gold positions starting to look really good. And even silver looks even better than gold. So precious metals starting to look a little good here. Okay, on the channel, I've been talking a lot about the dollar, and I've been talking a lot about yields. And yields continued to just get up here, get compressed before breaking that October high. And I mean, really breaking it. We did break it there in late August, but we didn't really hold for a good period of time. But this week, I mean, smashed every bit of that, as we got a nice little pullback there early Monday, and then Tuesday, Wednesday, Thursday just screamed higher. And Tuesday was kind of the tell for me that I think Wednesday was going to be kind of a brutal day. As you see here, I mean, yields were looking pretty aggressive. They were looking strong. And, this is the day before, and we got yields to pull back, and then they popped just like the dollar did when we got the interest rate decision. So carry over to Thursday, Friday, a little bit of a pullback. I don't think it's going to be a big deal. I'd imagine we just kind of pull back, consolidate, kind of like we have at a few of these different spots where we pushed higher, come back, consolidate, push higher. Probably just continue to do that going forward. But really, taking a look here at the week, I'm going to zoom out here. This is the highest close we have gotten on yields, at least the 10-year, going back for about 15 years, all the way back to 2007. So these are some of the highest levels we've seen in a while. So 15, 16 years. It's been a while since we've been up at these levels on yields. And for people to say that, oh yeah, these yields going higher is not a big deal. Well, okay, well, we haven't seen this in 15 years. So we'll see if it's not a big deal. And I think it is a big deal. So we'll see. 10-2 inversion, got a nice strong pop there on Thursday. Other than that, not too much to kind of talk about here with the 10-2 inversion. If it starts to really kind of climb and get over, probably this 6.5, start to have closes over Friday's kind of price level, then I would imagine we're probably just going to keep trending higher. And that's typically when you start to see the sell-offs in the stock market. So be curious to see if we get that. But yeah, we've been up to that level before, we rejected. So if we get above that level and start having closes above that negative 0.65 level, then probably seeing some bad things on the stock market coming soon thereafter. HYG, obviously with yields pushing higher, HYG and the other bonds didn't really have a great week. HYG still looking like the best one out of the LQD and TLT as well. But it's down at these lows here where it's kind of been and gotten to before. So yeah, we'll see what happens with the HYG. Nice upper wick there on Friday, so maybe it does drop early this next week. Just have to wait and see. Especially with yields breaking out, I mean, we might see bonds really start to turn over here. LQD maybe kind of retest a little bit higher. Seems like we've got some a little bit more dip buyers coming in here on the LQD, the investment grade corporate bond side, because that's a little bit more of a full body bullish candle coming in there on Friday, and not so much of an upper wick like we saw in the HYG. And take a look at the TLT. Yeah, they also have a little bit more of a full body, but I mean, it just could just bounce and retest because we do know it broke down this low that it put in back in October. So yeah, plenty of room to retest to the upside and then maybe push down later on, which makes some sense. I would imagine we see rates kind of pull back a little bit, or yields pull back a little bit, and then push higher later on, which pushing higher on yields will probably not do great things for bonds. All right, so taking a look here at the SPX. This is the SPX going back to the beginning of 2022. And on Monday, we basically did a little arts and crafts, and I put this very fancy box on here. And this is something I've mentioned before on the channel over the past several weeks, even back past several months. And the green lines, the vertical green lines, these are all the paths for bull markets overlaid to the bottoms, overlaid and correlated to the low that we put in back in October. So we have now very clearly deviated below those paths of bull markets where we went and took and made new bull market highs. And now we're just in no man's land. We're very clearly in no man's land. And if we should have been on a bear market path this whole time, or we should have continued on a bear market path this whole time, there's a lot of room to play catch up. And the only question really, that's really for you to answer, because I don't really know, right? We're in no man's land. I don't know how this is going to play out. But either we're going to come just straight down and just drop off, or we're going to have, you know, maybe a little bit more of a choppier time here coming back down and catching up back into those bearish areas. So that's really kind of up to you. I mean, I would plan for a longer duration kind of pullback here, but if you got the quick sell off, you know, take your protection off, get back in bullish down at these lower levels where it makes sense to be bullish. To me, it still doesn't make sense to be bullish up here. I'd rather be bullish at good price levels, not expensive price levels. That's what I'm kind of just watching right now. We're just in no man's land. Couldn't really tell you what we're gonna do, how this is gonna play out, because we've never seen this kind of pattern play out on the stock market, whether it's been bullish or bearish. So, Alpha Hunters, that's all I got. I just want to make sure you are very aware that, yep, we are just in no man's land. So have a great weekend. Enjoy that football like I will be. And don't sweat it, because in a year, it probably won't even matter anymore. Alrighty, take care, Alpha Hunters.